right, we are live. We
Okay,
are
sir.
what? We are live now.
Life,
So,
life and direct.
yeah. So yesterday I was telling you that this is moving average RSI. Then this one is moving average convergence, divergence, stochastic oscillator. TDI is traders dynamic index indicator, which is simply when you combine RSI plus moving average, then you get TDI. But these things I don't use them anymore.
Yeah.
So we have to we did this yesterday. I taught you this yesterday, still taught you RSI. So RSI and this stochastic oscillator, they work just like the same, almost the same. So but the moving average is much more popular. RSI is very popular, but it's just for beginner traders. Then TDI is when you then this convergence divergence, it happens in the market, and sometimes you can realize that from RSI. So when you even add this MACD, moving average convergence divergence, market can be going up, market can be buying while your indicator is showing that the market is selling. So that is when convergence divergence happens. Market is going up, indicator is showing that the market is going down, something like that. So it happens. So let me just rehearse the moving average again. Can you hear me clearly?
Yes, sir.
Good. So let me just rehearse the moving average again and the RSI. Then maybe later I will help you to set up the TDI later when you will start trading. So for now, this is important and this is important. Although it's not really something you will, it's not a must to be using them because people rarely use them, but they are also important. You know how they work. So let's go to the chart. Let's go to the chart. Let's go to a clean chart. Let's go to something like a USD card. This is USD card, right?
Yes, sir.
So I taught you how to add the moving average, right?
Yes, sir.
When you want to add a moving average on to the chart, you just have to come to. Although I already have to here, I have this one here is moving average, is exponential EMA, exponential moving average. Okay, so I set it at the level of 200. The period is 200, and I have two of them, and this one also the length is 50. So they just work the same, but if you want to understand them deeper and deeper, we just have to keep talking about them. But just to keep it simple, so to keep it simple, this one, for example, EMA, just come to indicator, just click here on the indicator tab, you click there, you just type moving average. You see it? So
Yes,
it
sir.
gives you that first one there. This is moving average convergence divergence, which is MACD, which is exactly this one. Moving average convergence divergence. Okay,
Yes, sir.
so this is just, and this one is moving average exponential, which is just this one that I have here, exponential moving average. So when you click it and add it, it will come here. Then as for me, you can set the length to any number you like, but I love to use 50. It works best for me. So when you just set it here, this is 50. You see it?
Yes, sir. I'm seeing it.
Then you close. Don't change anything else unless you want to go deeper into setting colors and blah 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 blah. Label and price scale. These things you just don't have to stress yourself to go that deeper. Now. Just change here to 50. You can even make it 100, 200, 120, but 50 is okay. Then you leave it. So it simply works. This is let me hide this is it. So this one here, moving average 50 is the blue line. You can see
Blue
the blue
line.
line.
Yes, the blue line.
So the concept is very simple. It simply works this way. When the price is above it, okay, it does what? It sells.
Yes, sir.
Do you see it? It
Yes, sir.
buys, rather, it buys.
Buys.
And when price is below it, it does what?
It sells.
As long as price is below it keeps on doing what?
Selling.
Selling. So right now you can see that this USD card, the price has gone above it here. Okay.
Yes, sir.
So the
Now,
buying has started. It will keep on buying. It will keep on buying. And while it's buying, this moving average will still be following the price. It will following the price. It will what?
following the price.
Keep following the price. To keep trailing the price. Once price is going to keep on following the price, following the price. But once price tends to go below it, okay, this way, then there's a chance the price might come to retest it and then keep selling. But if price eventually comes, to go
Above it.
above it, okay,
Start buying.
price will keep buying. Sometimes it might come to retest it and then still buying. I don't know if you understand this. It's so
Yes, sir.
simple. You
Yes.
understand, right?
Yes, sir.
So when you go to the chart, when you go to the chart, you will just realize that exactly what I just explained to you is what has been happening. You see, price is below it here, price broke below it here, and price was selling. And right here, price broke above it, tried to buy in, but it didn't buy strongly. Price came below it, retested, and then sold again. Price went above it here, it bought. Below it here, it sold. Above it here, it bought. Everywhere you go, it's something. Price came below it here, what? It was selling. Do you see it?
Yes, sir.
Price was above it here, it was buying. Below it here, it sold. Okay, it sold below it. Above it, it was buying. Here, above it, price was buying. You see it?
Yes, sir.
Price was buying above it. So it is as simple as that. It's not hard. So right now on this chart, this price is above it. So what do we expect? We should be more interested
Buyer.
in
On
taking the
buy.
buys, in taking the buys. So you cannot just buy because price is above it. You have to buy at a key level. Hope you understand that.
Yes, sir.
So I taught you market structure, right?
Yes, sir.
So I don't know if you so to take a trade right here now. Just quick recap. Here is a high, and this is a low. This is a what? A
A
lower
higher
high.
low. A lower
No,
high.
here is the lower high. Here is a high, but then this is a low. This is a lower high because this high is lower in high than this high. It's simple. And here is a what? A
A
lower low
lower
because
low.
low is lower than this low. And here is a what? A lower
A
high.
lower
And
high.
here is a what? A
A
lower
lower
what?
low. A
A
lower
lower
low.
what?
A lower
No,
low.
it's here rather here. Here is the lower low. Okay. And here is a
Yes.
what? A
A lower
lower
high.
high. And here is a what? A
A
lower
lower
low.
low.
Here is a what?
A
A
lower
lower
high.
high. And here is a what?
A lower low.
A lower low. And here is a what?
A lower high.
And now something is happening here. The price did not come to give you a lower low again. If the price had given you a lower low, okay, it simply means that this downtrend will continue.
Yes.
Remember, there is already a moving average here, okay, exponential moving average, which we are still looking at. But now using market structure, because market structure is king. Okay, market what?
Structure is king.
Market structure is king. Whatever you do in this market, you must always understand that. Always use market structure. You must always use market structure to know what you are doing. Market structure is king. Market structure reigns. Market structure rules the market. And this thing you're marking out now, lower highs and lower lows on the 4 hour time frame, is market structure. Okay. So what am
Yes,
I
sir.
telling you? That this market did not come to give you what? A lower low. Because if this market has given you a lower low, it simply means it will still come and give you a lower high and then another lower low, making the downtrend to
To
continue.
continue.
Simple. But then market did not come and give you a lower low. Rather, it came and give you what? A higher low. Because this low is now higher than this last one.
Yes, sir.
And after this higher low, it gave you what? A higher high.
High.
Because this high is now higher than this what? Than
This last one.
this last high. Thank you. Okay, so right here now, what do you see that happened? The structure has changed. the market has changed direction from a downtrend to what? To an
Uptrend.
uptrend. And now after a higher high, what do you expect in an uptrend? A higher low.
Higher low.
And after a higher low, what do you expect? A higher high.
A higher high.
And after a higher high, what do you expect?
A higher low.
A higher low. And then at this point, you also realize that the market has clearly broken above the moving average line. Do you see it?
Yes, sir.
And then after a higher low, a higher high.
Higher
After
high.
a higher high, a higher
A
low.
higher
This
low.
higher low came and retested this moving average line. You see it?
Yes,
It
sir.
came and it touched it and then pushed up. Okay, so right here, this is already enough knowledge for you to take a trade. So had it been you took your buy here, you'd have made money. But now it's not late. The market is already has given you a higher low, and now it is giving you a higher high because the price point now is already is almost above this recent. The price is already above this recent higher high. So price will give you a higher high to come and give you what?
A higher low.
A higher low. So at a higher low, you can take your buy and target the next higher high. Do you understand that?
Yes, sir.
Do you have any question?
No, sir.
Thank you.
Well understood.
Perfect. So we just did a quick recap there. Now let's move ahead to our topic. So this is which I just taught you moving average. So
Yes, sir.
RSI, which simply means relative strength index. Okay,
Yes, sir.
RSI. I taught you that yesterday. I showed you what RSI means. You still come here to the indicator, and then you type RSI. You see it, relative strength index.
Yes, sir.
Okay, if you click it, you click. If you click it, if you click it, okay, it has what shown below. See it here. This is RSI.
Yes, sir.
Okay, so it has three levels. One at the bottom here with dotted lines, one at the middle here, dotted lines, and one at the top here, dotted lines. Do you see those three levels?
Yes, sir.
The bottom line, the middle line, and then the top line.
Red
Do you
line.
see it?
Yes, sir.
You see it, right?
Yes, sir.
Very good. And if you look inside it, there's a yellow line there also.
Yes.
That yellow line also there can also be called is also a moving average line. It is still just like this line. You see what? A moving what?
Moving.
A moving average line. And this is it here because the one we are using is 50. If you come here, you will see that the length is 50 on this one. Okay? But on the RSI, the moving average is using is 14. But
14.
it works. You can change it.
Okay.
You can set things here. You see it's using I think this is standard moving average. You can change it to EMA, just like this one I have here. But just keep it simple until you read and study more on these things and you know how they work. Then you can make amendments. You can change things. But for now, let us use this for just our class.
Yes, sir.
Hello. So now RSI is very simple. So when price goes above the top line, okay,
Yes, sir.
hello,
Yes, sir. I'm not available, sir.
traders, people see it as overbought, like price has bought too much. And when something buys too much, the next thing is for it to sell. That thing will sell. So when price goes above this top line, okay,
Yes, sir. Yes, sir.
then you expect that this price will soon start to sell. It will soon start to drop.
Yes, sir.
And it happens right here. Price. This is the line. This is the line. This is the line of this RSI. This is the line of this RSI. This is the line. I don't know if you can see the line on your end.
Yes, I'm seeing it.
This is the line on this RSI. This is the line. This is the line. This is the middle line, and here is the bottom line. You see it now.
Yes, sir.
So whenever price comes above this top line, it is called what? Overbought.
Yeah.
And then
Overbought.
you expect that the price will start to sell.
Yes, sir.
Do you understand?
Yes, sir.
It's a very simple concept. Okay. And when price is below the bottom line, okay, it is called oversold. Price has sold too much. It has sold a whole lot more. And then you expect what? For it to buy.
Bye.
This point now is price has oversold here. Price oversold here a lot. See this point? See this point?
Yes, sir.
See here. Price came below the bottom line, okay, and then it has oversold. And what happened? Price started going up. The market bought,
Started buying.
started buying, started going up, started going up. Okay, it went up here, still came down to the below the bottom line, bought again, still came down there again, and then it bought. So every opportunity, so you get your opportunity whenever the price goes above or below those top or bottom line. Just simple. There are much more meanings to this, but this is the basic things you should know to avoid confusing yourself. I don't know if you understand.
Yes, sir.
Do you have any question on this?
No, sir.
Perfect. So let's go to the timetable. Okay, so patterns. Okay, there are price patterns and then there are candlestick patterns. So price patterns like the head and shoulder price pattern, the double tops and the double bottoms. So let me go and show you the head and shoulder first. The head and shoulder on the chart, how they appear on the chart. Are you there?
Yes, sir.
Right. Excuse me, let me check something. Head and shoulder price patterns. The head and what?
Shoulder head patterns.
The head and shoulder. Okay, this is, let's go, let's use GBP CHF for this example. GBP CHF. Then GBP CHF. I think I have drawings here on this chart. Remove drawings. God, I have 40 drawings. Remove them. Remove the drawings. Remove. Okay. So head and shoulder. Okay. 1 hour. Okay, here is a perfect example of head and shoulder. This is head and shoulder. I have it here already on my favorite menu bar, but I told you can come here 1, 2, 3, 4, and then expand it. And the 1, 2, 3, you see it there. Okay. So this
Yes,
is
sir.
how it looks on the chart. This is the left head. This is the left head, the left shoulder rather. Okay, the left shoulder, and then this is the head. Let me draw it out for you. This is the head, and then this is the neckline now. This is the right shoulder, and this is it. Bam. This is what? Head and shoulder pattern. This is the left shoulder. This is the right shoulder, and this is the head. This one now, it pushes price down. This very point, or this very point. Okay,
Yes, sir.
this very point now on it is where we call the what? Where we call the neckline. That's where we call the what? Oh, one moment.
Okay, sir.
Okay, back to the chart. So this point is where we call the what?
Next
The
line.
neckline.
Next line.
So this is where we call the neckline. You see it?
Yes, sir.
The neckline. So this is the head and shoulder. This one now, whenever if price once it happens on the chart, okay, it signifies that this price will sell. It will push price down. Price will push down. Price will go down. It will push price. The market will sell. Okay, but whenever you see it, you cannot just jump in and start selling. You have to wait for the price to break the neckline. Price should break the neckline. This is the neckline. Price should come below the neckline. Okay, and then you
Yes, sir.
can start selling. Or then you can start selling. Or once price breaks the neckline, price can always or sometimes come to retest it and then sell.
Yes,
Do
sir.
you understand that?
Yes, sir.
So this one now, then here also another example is what we call the inverse head and shoulder. This is the inverse head and shoulder. This is the left shoulder. Are you seeing it?
Yes, sir.
This is the inverse what? Head and shoulder. The inverse head and shoulder. You see that?
Yes, sir.
So here is also the what? The neckline.
Next line.
That is the neckline there. There's the neckline. So this one now pushes price what? Up.
Up.
Yes. And when you see it happen in the market, you cannot just jump in to start what? Buying. You have to wait for
Buying.
the price to
To
break the
pass.
neckline,
Yes.
okay, to continue buying. Or price can decide to retest the neckline and then keep on buying. Please, do you understand this?
Very. Yes, sir.
This is the what? The head and shoulder pattern. The head and what?
So that's pattern.
The head and shoulder pattern. This is the head and shoulder pattern. You see that?
Yes, sir.
The head and shoulder pattern. That is it. The head and shoulder pattern. So I've just taught you that. One second, please.
Yes, sir.
Okay, so that is the head and shoulder pattern. Let's go back to our. Okay, let's go back to our GBP CHF on FX here. Okay, so that is the head and shoulder pattern. You can see that.
Yes, sir.
So now I will have to show you example of that on the chart. An example of that on the chart, so you can
That.
see that. So right here, remember, sometimes the market does not print these patterns to be perfect. Do you understand?
Yes, sir.
The market does not print these patterns to be perfect. They must not be perfect like this, but with time, you will be able to identify them. With time, you can be able to identify them on the chart. So here is a head and shoulder pattern. Look at it. This is the left shoulder. Are you seeing it?
Yes, sir.
And then this is the head. And then this is the right shoulder. And this is the neckline. Do you see that?
Yes, sir.
This is the perfect example of head and shoulder. Let me drag it out. Do you see what I drew for you on the screen?
Yes,
And
sir.
do you see how this one happened?
Exactly, sir.
And after that, it pushed price down. Price sold. But now, as price is selling, and remember, here is the neckline. Is that correct?
Yes, sir.
So let's put it back here on the chart. Exactly. So this is the neckline. So this is price broke below the neckline and sold. But even though it's selling, price it is sold, but price is now back to retest it, the neckline. Price is back to retest the neckline. Okay, it came there on the neckline and closed with a weak rejection on the 1 hour candle. Okay, so this sell has a high tendency to continue. Please, do you understand?
Yes, to continue selling.
To continue selling because price has broken below this and has now retested this, it will now continue what? Selling.
Selling.
But this should not be the only confluence you use to take a trade. You must use your market structure. Okay, use your what?
Yes. Market structure.
Market structure knowledge and other confluences before you can take this trade. Okay, so you have seen that, right?
Yes, sir.
Okay, perfect. So let us go and let's go and look for more examples of head and shoulder pattern. Head and what?
Shoulder.
Head and shoulder pattern. It even looked like it happened here. It looked like it happened here. You can just, you see, like it happened here. This is the left shoulder. This is the head. Right shoulder here. The right shoulder here. And then price pushed up. Do you see that?
Yes, sir.
So it must not happen perfect
Yes.
as you want it to be, as you expect it to look like. It must not happen perfect as you may wish. So it happened here. And this one now is called inverse. Okay, the
Inverse.
normal one is like this. This is the normal one, which pushes price down. Okay, this is the normal one. You see it,
Yes, sir.
but this one now, this is the inverse of this. This is the inverse of this. This is now the inverse. This is called inverted and shoulder, which is this same thing. Do you understand?
Yes, sir.
Inverse what? Inverse head and shoulder. Okay.
Yes, sir.
So let's look for more example. Let's look for another a single example again. Let's look for you have to find them in a trending market. I think I found another one that happened here. Another one happened here, but didn't play out very nice as I expected to do. Let's keep on looking for it. Just be looking to see if you will see anyone. Can you see anyone?
Mm.
I think there is one here also. There's one here also. Okay, there's one here. See this one. See this one. This is head and shoulder pattern. This is the head. This is the left shoulder. And price broke it to keep on buying. This is how it looks. You push
Yes, sir.
price up. Do you see that?
Yes, sir.
So with time, while you are trading, you will begin to realize and understand this. There's even a small one here. I can see a small one here right now. This is it, the left shoulder. There's one here. You see that? This one is the shape is so fucking shapeless, but it is still inverse head and shoulder. Okay, so you've seen that, right?
Yes, sir.
Perfect. 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 So let's go back to our timetable. So double tops and double bottoms. Double what?
Hold on, sir. Double button.
Okay, that one is super easy. It's not hard at all. Like this place is double. Okay, it's not perfect, but this is a double top. But it's not very perfect. It came here, price went down, and then came back to that same level again to sell. Sometimes it looks like an M. It's a double top. I don't know if
Double
you
top.
saw that.
Yes.
That's a what?
Double top.
A double top. Double tops and double bottoms. Double tops and double what?
Double buttons.
Double bottom. Double tops and double bottom. So let's go back to okay. There is even one that have okay. Let's use this chart for example. Okay, I think I'm seeing some of them here. Okay. Look at here. This is also a double top. This is a top. You can simply identify this. It's so simple. This price came here. Okay,
Yes, sir.
came down again. Still came to that same point to sell. You see it.
Yes, sir.
These things are so simple. They are not difficult. See double top again here. So this is a double top. This is a what?
Double top.
Why? Price came there to that same top, went down, still came there again, and then sold. So double top often pushes price down. Price goes way down whenever it happens in the chart. Do you understand?
Yes, sir.
It pushes price what? Down. So you can be able to see if you see anyone, you can call my attention to it. Okay.
Yes, please.
Huh?
I want to be a girlfriend.
We are here. Yeah, this can also be a double top. Okay, this can also be a double top. This, okay, you're right. See here also, here can also be a double top. You see that? So that is how it happens. Okay, and right here is an inverse head
Double
and shoulder.
button. Double button.
Right here, right here is an inverse head and shoulder. Here, I can see this here now. I can see this. I can see this. I can see this right here. See it right here. This is it.
Yes, sir.
If you can see that, you should see it. Okay, this is how it looks right here, and they push price up. You see that?
Yes, sir.
So this, have I showed this one? This is a what? Also a double what? A double top. Here is also a double top.
Double top.
Here is a double top. Here is a double top. So that is here is a double bottom. This point is also what?
Double
A
bottom.
double what? Bottom.
Double bottom.
Why? Because price came to it first, went up, still came to that same level again, and pushed it up. Right here also is a what? A double bottom. Do you see it?
Yes, sir.
Does it make sense to you?
Yes, sir.
Perfect. Okay, perfect. Look at it here, double top, double top. Here is a what? Here is a
Double
what? Are you
top.
not there?
Double top.
Double bottom. Oh my
Um,
God, man.
sorry, double bottom.
Here is the double bottom, not double top. Look at here also qualifies
Yeah.
for a what? A double
Double
top.
top.
Exactly. And look at here. Look at this point now. This
Confirm
point
double point.
is also a very nice double top. Okay,
Double top.
which should push price down, and it has pushed price down so far. You can see that, right?
Yes, sir.
Perfect. I like that you are following up. I like that you are following up. I so much like that you are following up.
Yes, sir. Thank you, sir.
I like that you are following up. Believe me, I like that.
Thank you, sir.
I like that you are following up. So, what we're gonna do next is we have to so what is the next we have to do? The next should be okay, candlestick patterns, dodgy, hammer, and then engulfing. So let me go and show you a dodgy candlestick, a dodgy. Okay, let's go and browse it first. Dodgy candlestick. Okay, this is it. This is dodgy. Do you see them?
Yes, sir.
This is dodgy. Do you see it here?
Yes.
Let me open it. Let's open here. You see how they look? This is a dodgy candle. See another one? This is a dodgy candle. You see them? These are dodgy candles. These candles are called dodgy. Do you see it?
Logic candlestick.
Dodgy. DOJI. Dodgy candlestick. You can see that, right?
Yes, sir.
You see? These are called dodgy candles. You see them, right?
Yes, sir.
Perfect. These are all called dodgy candles. You see it here?
Yes, sir.
So let's go and see if you can identify them on the chart. So do you see any dodgy here?
Yes, sir.
This is a what?
Dodgy.
A dodgy candle. You see that?
Yes, sir.
Perfect. So you can be able to identify dodgy candles on the chart. Do you see this one?
Yes, sir.
Is a what? A dodgy candle.
Dodgy
See this
candle.
one also? A dodgy candle.
Dodgy candles.
So you can see them on the chart all the time. They are dodgy candles. So with time, you will still learn. You will still get to know what they mean and what it is that they stand for. Okay, and
Yes, sir.
how they help in decision making in the market. You get to learn how they help in decision making in the market. Okay,
Yes, sir.
perfect. So let's go and we're going to show you again hammer. Let's browse it. Hammer, hammer. Okay, do you see hammer?
Yeah, he showed me yesterday. Yes.
Perfect. This is hammer, and if you look at them, they look like a hammer indeed. Okay, look
Yes,
at
sir.
them
Yes,
also like a hammer. You see it here in a chart. See them also. This is a hammer. Okay,
yes, sir.
see them here also. This is a hammer. You can see that, right?
Yes, sir.
You can see them. This is also a hammer, an inverted hammer, and this is what a hammer. Okay,
Yes, sir.
perfect. So let's go to the chart so you can be able to identify them on the chart. Do you see this one?
Yes. Hammer. Yes,
It's
yes.
an
That
inverted
no,
hammer.
is hammer. Yes, this red
Okay,
one also here.
which one are you talking? You say is a
This
hammer.
one. No, keep coming. Keep coming. Keep coming.
This
Keep
way.
coming. Keep coming. Oh, keep coming. Keep coming. Yes.
This one.
Yes.
Yeah, it's also a hammer. Perfect. That's a hammer there. So you can identify them. This is also a hammer. This one is a
Hammer.
hammer.
Yes,
This
sir.
one also is a hammer.
The hammer.
This is also a hammer. Okay.
Yeah, this red and green there too. Yes, sir.
Yeah, this is a hammer. Okay, you can see them, right?
Yes, sir.
This one is a dodge, not a hammer. This one.
Roger.
This is
No,
also
I
a
know.
dodge. This is
Yes,
a
I know.
dodge. Perfect. This is a hammer. This one is a hammer.
Hammer.
This one is a hammer.
This,
This is also
this,
a hammer.
yes, hammer too.
Perfect. So you have this is also a hammer.
Yes, sir.
So you have been able to identify to get to know about this. So you now understand what what this hammer means, right?
Yes, sir.
Perfect. Perfect. So what is the next one there?
Coffee.
Engulfing candle. Engulfing candle. So let's see if there's any engulfing candle you can find here. Engulfing candle. I think engulfing happened here, but let's leave it and find another one. An engulfing happened here, but let's look for another one also. You see a dodge. This is a dodge. This one here is a dodge.
Yes, sir.
An evening star, evening is a dodge. This sharp pattern here is called an evening star. Then whenever it happens, it pushes price down.
Okay, sir.
Boo, yak, boo, yak, boo, yak, boo. 1 second. I think we have to go to another. Let's not waste our time here with this one. Let's
I
go to
know. I
another.
know what is golfing. That
I will show
strongest
you.
candle they beat. Only keep beat other candles, maybe like 10 or 5 or.
And let's go and find it because we are live.
Okay, sir.
So let's go and find it. You might never know who will ask questions on it. Who needs to learn? If you see it, you can show me. It's also a process of learning. If you see it, you can show me.
Yes, sir.
There's also an engulfing candle here. Right here is an engulfing candle here. But let's still leave it. Let's explain that one because it's very simple. I think it makes sense. Okay, we are on. Let's go. Let's go to 1 hour time frame. Oh, we've been on 15 minutes time. Let's go to 1 hour time frame. So this thing will make sense. I've gone to 1 hour time frame now. So 1 hour time frame now. Okay, this is also this here. Here is an example of an engulfing candle. Okay, you see
Yes.
all of these candles here. We are on the 1 hour time frame. You can see that, right?
Yes, sir.
So which means each candle on this time frame takes 1 hour to form. It takes one
Perform.
hour to open and close. Okay, so each of these candles here takes 1 hour to form. And here we have candle 1, 2, 3, 4, 5, 6, 7, 8, 9,
About
10,
about
11, 12, 13, 14, 15, 16, 17, 18, 19, 20. 20 candles here, right? Which
yes, sir.
means all of this movement here took 20 hours
Perform.
to form all of this movement here. But then an engulfing candle came. An engulfing candle came. One candle, which is this candle. This candle just came once, okay, and engulfed
All of them.
all of
All
these
the
candles.
20s. Yeah.
Which means what 20 candles took 20 hours to do, one candle came and did under 1 hour. So this candle engulfed all the space they had, everything. It engulfed all of these spaces, which is why we call it an engulfing candle. And once this happens, it shows there is now a momentum, there is a pressure to put the price either up or below. Do you understand? So when this engulfing candle happened to be bullish, okay, so it means that there is a pressure to push the price up, to take the price up, and market bought after this engulfing candle. It bought. I don't know if you realize that.
Yes, sir. It bought massively.
So is that do you understand that?
Yes, sir.
Look at this is also another engulfing candle here. Let's go and browse this so that you can happen to understand this engulfing candlestick pattern. Engulfing candlestick, bullish engulfing. Okay, let's look for an example that okay. This is an example that was super understandable for you. Do you see this engulfing candle? This candle 1, 2, 3, they were just forming. They are not very healthy. Okay, but then one single candle came and then engulfed the three of them, meaning it took out the whole space they have been creating. Are you there?
Yes, sir.
So assuming that these candles are assuming that this chart was taken from the 4 hour time frame, which means that each candle here took 4 hours to form. So 4 hours to form, 4 hours to form, 4 hours to form, giving you 4 plus
12.
4 is 8 hours, 12 hours to form.
Mhm.
But then that same 4 hours, one single candle in same 4 hours came and took out every other space this tree has taken. It engulfed them, showing you there is a pressure, a momentum to take the price down because it's a bearish red candle. Do you understand?
Yes, sir.
Any questions so far?
No, sir. Very understand.
That is a simple example of a what? An
Engulfing.
engulfing candle. This one's also engulfing candle. This is an engulfing candle. This is a bearish. This is a bearish candle. This is a bullish candle. This candle was forming, but it is not that big. It's small. But then a bullish candle came and engulfed it. Why? Because it covered the space up. It covered this. It covered its length in every pattern. It is bigger than this one. It's more healthier. It shows that there is a momentum in the market to push this price up. Okay, the buyers are more than the sellers now. Do you understand?
Yes, sir.
I hope you remember that these candles represent what people are doing in the market. If there are more green candles, it means that the buyers are more than the sellers. If there are more red candles, it means that the sellers are more than the buyers. And remember, you can change the colors of this candle on your own settings, but they are being left to be red and black and green, so that you know that this green one means buying and this red one means selling. When you see this green one, it always take the price. If price continues to go up, creating higher highs and higher lows, if price continues to go up, the closing price is always above the opening price. Price with the candle must be blue, showing you that the buyers are much more than the sellers in this market at that point in time. Please, do you have any question on that?
No, sir.
I don't know if you really understand what I'm trying to explain.
Yes, I understand it. I will still go back and watch it again.
Very, very good. Very, very good. Very, very good. So right there we have that candle, and so also be looking if you see any bullish, any engulfing candle, you can point it out for me.
Yes, sir.
You can be looking. If you see any engulfing candle, you can kindly point it out for me to see it. I'm seeing so many of them already. I'm seeing so many engulfing candles here. So many engulfing candles. There is one here. See this place? There's an engulfing candle here. You see that?
Yes, the only two.
One, two. Yeah, you can even it can even be one. It can be one. It must not be more than it can be one, it can be two, it can be three, it can be one. Okay, okay, let's see if we can find an example of one. Here, this candle did not engulf this one. You see this place? This is not an engulfing candle because it did not
Yes,
engulf.
sir.
See this? You see this place?
Mm.
It did not engulf it. You see it? So it is not an
Yes.
engulfing candle.
This place too. You just pass now. The
This side or
place.
this side?
Yes, yes.
Okay, this one,
No, not that one. This place
this
here.
one, this one.
Yes, sir.
Yeah, that makes sense. Perfect. Look at this one also. It's an engulfing candle. It engulfed it. So sometimes the market must never come to make these things look perfect the way you were maybe the way you may be expecting to see them. It must not be perfect because this is the market. This is real life market. Okay, it must not be what perfect.
Perfect.
Here is also an engulfing candle. Okay, okay. This
Yes,
one
sir.
now is a single candle. Here now is only one. It's an engulfing candle too, but there's only one here.
Yes, sir.
You see,
Yes, sir.
this is a bullish engulfing candle. The same thing we saw here. Oh, I took it out. What is it? You see, just this same thing, bullish engulfing, just this same thing. That's exactly what happens here. Is that not correct?
Yes, sir. Very correct.
Yeah. Let's go back to our timetable. So we have done this once. Now, here we have now arrived to trading strategies. Okay, so we have day trading. Under day trading, we have scalping, intraday trading techniques, and then we have swing trading, medium-term strategies, using technical and fundamental analysis, position trading, long-term trading, using macroeconomic trends. So let's start from day trading and then scalping. Okay, day trading simply means, are you hearing me?
Yes, sir.
Day trading simply means people, are you still there?
Yes, sir.
Day trading are traders. These are traders who who opens positions in the market and closes them within the same day. Okay, they enter the market take a buy or take a sell and then close their position that same day. They don't leave it to the next day. Do you understand?
Yes, sir.
What did I explain, please, if you understand?
They battle the business and close the business that day.
Exactly. Those who took a trade the same day and then close that same trade the next day, they don't hold the trade till the next day. Okay? These are day traders. You understand?
Yes, sir.
Those are what?
Day traders.
Those are day traders. Excuse me, 1 second.
Yes, sir.
Can I pause this? Oh, in this, in this class. Hello, are you there?
Yes, sir.
We are almost 1 hour in this very class. So. Okay, so we just stopped at day traders. So day trading, then scalping. Okay, scalping. So this day trading, we have scalping under day trading. Scalping are people who takes hello.
Yes, sir.
So scalpers are people who doesn't like to stay long in the market. They can take a trade and close it. They can take a trade and close that trade within 5 minutes, 2 minutes, 1 minute, 10 minutes.
Onye ọ
Just
ga-enwetakwa n'ego la the thing.
yeah, they get money that way also. Some people prefer it like that. They don't like to stay long. They have their strategy. They just like to do it that way. Do you understand?
Yes, sir.
So those are the scalpers we have in the market. Those are the what?
Scalpers.
Those are the scalpers we have, and those are the people that scalp the market. They are the scalp the market. They scalp the trades in that way. So one second. You are hearing me, right?
Yes, sir.
So those are the scalpers we have in the market. The what?
Scalpers we have in the market.
Those are the scalpers we have in the market. They scalp the market. So I've explained to you what they do. Then the intraday traders.
Yes, sir.
Intraday traders are also traders who, that is just day traders themselves. Intraday, they take trade and close it. They take trade and close the trade that same day. They don't like to hold it for too long. Please just 1 second, please.
Yes, sir.
I don't want this class to be more than 1 hour and 10 minutes. So we have to.
Good morning. Good morning, sir. Okay, go pick your order.
Yes. If it's too much, it's already more than 1 hour, I think.
Yes, sir. 1 hour, 4 minutes.
You can always do more classes instead of doing all of them in one class. At least you can understand things gradually without forcing them. Okay, so let's do a quick recap. So the intraday, those are just they are day traders. They take trade the same day and close the trade the same day. Okay.
Yes, sir.
So we have swing trading. This swing trading, it involves those who hold their trade more than one day. They can enter a trade today and close it the next day or the next 2 days, or the next 1 week, or the next 2 weeks, depends on how long. Okay, so they hold their trade more than one day. These are what swing traders.
I
Do you
don't understand.
understand?
Uh,
Okay, you're just seeing my screen, right?
yes, sir.
So these are what? So these are swing traders.
Okay, that's.
So who are the swing traders?
Ndela pata, pokwa, maybe like 10 minutes, 15
Swing
minutes.
traders, not scalpers. You are talking about scalpers. I'm asking about scalpers are the ones that enters and takes trade and leaves within 5 minutes, 1 minute, 3 minutes, 10 minutes. They don't stay long. You understand?
Yes, sir.
So swing traders are the ones that hold their trade more than one day, 1 week, 2 days, 4 days, 1 week, 2 weeks, sometimes even 1 month. These are the swing traders. Okay.
Yes, sir.
So we have the medium term strategies, how they do it using technical and fundamental analysis. So swing traders, I think I've been teaching you the technicals, and also I've taught you the fundamental analysis, which comprises of this technical analysis is, for example, it's when you come to the chart and then you begin to mark out your levels. For example, let's do this. Let's say USD. Okay, without delay, we come to the. I taught you top-down analysis, right?
Yes,
Come to
sir.
the monthly time frame. You reset your chart. You see that this market has been what? Has
Buying.
been very bullish. It's been buying since 2000, since 2017. It's been buying. It's been going up since 2017. So imagine somebody who bought this market around here, who entered the buy here in 2017, maybe with the $50 or $1,000 or $5,000, and has been holding this market since then till now. The person must have become a billionaire. You understand?
Yes, sir.
So, but it has been buying since then. The price has been going up ever since then. It has been going what? Up ever since what? Then it's been going up. Price has been going up. Then you come to the weekly time frame. Okay, you look at it. It's also going up, but even at that, the market is, you know, the market has retested. Something is happening here on the weekly. Okay, the weekly is looking like a kind of bearish, because if you look at it, okay, here is a high, a
No,
higher low, a higher high, a higher low, and then a higher high. Okay,
higher,
then even, yeah, this is a higher high,
higher
this is
low.
a higher low, yes, but this high here is now a lower high.
Lower high.
Okay, and
Yes,
after
sir.
a lower high, market gives you what? A lower low,
Lower low.
to give you another lower high, to give you a lower high. It give you a higher low, rather, a higher low, and then it's gonna give you another higher high. So even at this, okay, the market sold, but now it has turning back to an uptrend. I don't know if you understand that.
Yes, sir.
Any question?
No, sir.
So the market has been buying, but it turned bearish briefly. It sold briefly, but now it is now turning what? To a bullish market. Then you come down to the you
Daily.
come down to the daily time frame. Okay, on this daily, you can decide to put your trend line, pick trend line from this touch and place it here on second touch, then you extend it. Okay, now
Yes,
we are doing what is called technical what?
analysis.
Analysis. Okay, so we have
Yes,
just placed that right there. And then I'm looking for key zones and key areas. And I'm seeing a level here, which I've taught you before, area of interest. Right here, I mark it out. This area of interest, I mark it out. Okay, so what happened there? Okay, price was a support. It came here and touched it as support, and this support pushed the price up. Price went up, and then price broke below down this. The price broke below down this level. Okay, can you see that?
Yes, sir.
Good. Price broke below down this level, and price came up again. Now support has turned what? Resistance at this level. Do you understand that?
Yes, sir.
Support has turned resistance, and then price resisted here at this same level that I marked out, and it pushed price down. Do you see that?
Yes, sir.
So right now, price is coming back. Price is now buying, coming back to this same level. Okay, so when price comes back here, is either this place will reject the price to push price down again, or price will break above it, okay, to retest it, and then to continue buying. Do you understand?
Yes, sir.
Do you have any question?
No, sir.
So now this is the daily time frame. We now go to the what? The 4 hours time frame. What we are doing now is the what? The technical what? Analysis.
Analysis.
Are you understanding so far what I'm
Yes, sir.
doing?
Yes, sir.
I have taught you this before, right?
Yes, sir.
Okay. This I'm also seeing another area of interest. Here was previously a resistance here. Okay, but then resistance turns support. Price was touching this area before. You can see that once price comes here, it pushes it down. Price comes back there again, it pushes it down, and price broke above it and comes back there. It takes price up again and again and again, push price up, and then price broke below it. Okay, so I mark it out because of what? It's an area of interest for me. Do you understand?
Yes, sir.
And meanwhile, being on this same time frame, remember, price was bearish here. Price was making a low, a lower high, a lower low, a lower high. Okay,
Yes, sir.
simple. A lower low, a lower high, a lower low. So price was bearish here. Price was simply bearish here, but here price became bullish. Do you understand? Because here is a low, here is a high, a higher low, a higher high, a higher low, a higher high, a higher low, and a what? A higher high.
High.
But then here become bearish. Do you understand?
Yes, sir.
And after becoming bearish, because to mark it out, price is now bullish. But how will you identify that? Simple. It's not hard. Because what is going on here? Price was giving you this. Price was giving this. Here is a high, and here is a low. Here is a what? A lower high. Here is a what?
A lower low.
A lower low. Here is a what?
A lower high.
Lower. Here is a what?
A lower low.
Here is a what?
A lower high.
Perfect. 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 And here is a what?
A lower low.
And here is a what?
A lower high.
And here is a what? It gives you
A
an
lower
equal low. No
low.
longer give you this low and this low. And this can also be called what? A double bottom. Okay, a double what?
Bottom.
Because I taught you double bottom today. Here is
Yes,
a double bottom. And when the price does a double bottom, it will push price up, and it
yes.
has pushed price up. Okay,
Started
but
higher.
then after price gave you this double bottom here, okay, price came up to give you what? A high, and now this high has broken above. It has broken above this recent high of the downtrend here, which simply means that the trend is changing. And then price came here and gave you a low. You see this low?
Yes, sir.
He gave you a low here, right?
Yes, sir.
After this low, what do you expect? A
A
higher
high.
high. Because it has changed to a what? To an uptrend. It's no longer trending to the downside. I don't know if you understand this.
Yes, sir.
So this
Higher to
is what we call what? As we are doing all of this, is simply called technical what? Analysis.
analysis.
I'm also seeing an area of interest here also. Here. This place now price came to retest it, is an area of interest. Put has played that because price here was resistance and price came back to retest it and they pushed price up.
Yes, sir.
I don't know if you understand that.
Yes, sir.
Perfect. Perfect. So what more? What more is on the distance? Okay. Okay. Fundamental analysis. Okay. Okay. This is it. You come to this is forexfactor.com. You can see it. Forex what? Are you there?
I for sure want that, you know.
This is Forex Factory. Forex Factory. You can see it here.
Yes. Okay.
Forex
Forest.
Factory.
Yes.
Okay. This is where we get the news. Okay. The economic data from central banks of countries, from governments of countries, from companies, business enterprises, those that are in charge of moving the economy. Okay, like today, right now, the time is 1:23 p.m. Okay, Nigerian time. So, and there's a news coming up on USD, and this news has a red folder, which means this news has the capacity to move or affect the market. Do you understand?
Yes, sir.
It has what?
The capacity to affect the market.
So, and the news it will happen in the next few minutes. It's already counting down. Okay. So at this time, is advised that you should not be trading. You should not be in the market at this time. Okay.
Yes, sir.
You should not be what?
Be
Trading
in the
at this
market.
time. You should
Yes.
not be in the market at this time. Don't be trading. Don't trade. So when you come, so this one now, this is 1:30. So whatever, but apart from that, if this news happens, you open this folder. See this folder here? You open it. And here it tells you that, say, usually it tells you actual greater than forecast is good for currency. Okay, so this is the previous. The previous happened to be 0.2%. Okay,
Yes, sir.
this is previous. This is
Yes, sir.
forecast. This is actual. So when the news happens now, it will become actual. But forecast is what they predict will happen. That is forecast. Do you see that?
Yes, sir.
So when this is forecast 0.3%. So if this actual comes out and it becomes greater, it becomes higher than forecast, it means that USD is strong and the number will turn blue, just like this ones. But if it is bad for USD, it will turn red, meaning that USD is weak temporarily for that moment. So this is just fundamental analysis. Okay, so we pay much more attention to the red candles or the orange candles, because those are to the red folders or the orange folders, because those are the folders that have the capacity to do what? To move the market quickly. I don't know if you understand.
Yes, sir.
So I think that should be all for now
Yes, sir.
until another time. Okay.
Yes, sir.
Okay.
Thank
So
you
have a
very
nice
much.
day.
Thank you, sir.
Sorry.
Thank you.